Prices are down 18%, borderline crash. But it looks like the bottom is behind us? Yeah, we got some really weird stats this month. You would otherwise think the world is ending if you just read the headlines out there right now, but stay tuned as I break down and compare the numbers we just got to the peak of the 22 market. Yeah, it's gonna be a good one. Now, if you're looking for some help on how to navigate this real estate market, you can book a call with me using a link that's on the screen right here, www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto! Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX brokerage in the Greater Toronto Area, on top of making awesome educational real estate content just like this one for you. This one I've been waiting for. This one is going to be interesting, because I've been wanting to compare the numbers 1 year later from the peak of the market, which is February 2022. So let's go. Of course, we have to start off with the year-over-year numbers, so you have a baseline of where we're starting from, right? And you can see right off the bat over here that sales are down almost 50%. Yeesh. Active listings are up 40%. Yeesh. Prices are down almost 18%, and days on market has more than doubled. Just from looking at that alone, you would imagine the market is crashing. However, it's not really like that when you kind of peel back the data and the onion. Remember, I'm fairly optimistic about the long-term trajectory of the market, but my analysis of what was going to happen this year, and the best case was that prices should relatively remain flat given the sentiment and the interest rates. However, the sentiment has really flipped very hard. It's pivot really hard in the early bits of February 2023 in certain parts of the market, mainly the freehold. Now, let's have a look at the month-over-month number right here. Prices are up 5.48% from January. 5.48%. This is not normal. That's very high. Sales are up 50%. Also not normal. Sales should be up in January, but not 50%. New listings are only up 8%. It should be much higher than that. And active listings, meaning the number of homes available for sale at the end of the month, is down 25%. This is not normal, and this is the biggest indicator of them all. The months of inventory is down 50% to 1.46. This is not normal. It's a very steep drop. These numbers are all indicative of the market accelerating, meaning prices are going up. Competition is increasing. The sentiment has flipped. I said this in the past 9 months. A month does not make a trend, but a trend does start with 1 month. The bottom could be behind us right now. We'll see in a few months. Now, if we look at the micro markets here, you can see that the 4 and 6 detaches are up 15% to 1.7 mil. Same as before, while sales are up across the board big time, we're still at a 14-year low, which means the average number can be skewed a little bit. This is the case in the 4 and 6 detaches, if you look over here, as a third of the properties being sold are over $2 million. Yeah, see? Wild. Now the semis are up 11.3%, and this is by far the hottest segment of the market right now. Like, we are talking 20 plus offers for ready to move in properties. It's wild right now. It's not quite back at peak prices, not even close, but the demand is there and it's incredibly high. Now, when we look at Toronto towns, we're back over 1 million, and you can see that effectively all the freeholds in the 4 and 6 Toronto have less than 2 months of inventory. That's really low, like really low. Now, condos are up a little bit, months of inventory has gone down a bit, and the signs of acceleration are there, but not at the rate of freeholds in Toronto. Now, when we look at the 905, which is basically the burbs, the detaches are up 4.5%. Semis are hovering around the same thing, but the months of inventory is incredibly low. Same thing with townhomes in the burbs. Now, the 905 condos are behaving just like the 4 and 6 condos, but slower, but still moving. And to summarize this entire micro market up for you, that's over here, anything that is ground-based with 3 bedrooms, less than 1.25 mil is moving very fast. Look at the average price for these things. It's $1.3 million, and the list to sale ratio is 102%, and 40% of them are selling over ask. As I've said before, I think it's a demographic shift of the millennials who have kids now and needs space. The condos are being traded for homes right now, which makes total sense when the market is going down because they're trading for more expensive assets. But the question we have right now is this still a down market? Honestly, it doesn't look like it, right? It looks like an accelerating market to me. All things in a market, in like up market, that should be green are green. All things that are red are red. Yeah. Now, I still believe there is some stress in the market and it'll be felt in the condos the most since they are the most likely asset that is going to be sold if and when investors are deleveraging because of higher interest rates. Now, let's look at the past months and the rate of change to give you an idea of the velocity in which we're moving. So you can see basically over here, back to June 2022 prices right now, just before the Bank of Canada announced that 1% interest rate hike. Yeah. This is also the lowest months of inventory since the peak of the market. And the freakiest of all things is that the 5.48% average price increase is closer to the peak of the market price increase of 7.38% in Jan and February of 2022 than it is to every other month. Keep in mind, rates are still very elevated. Now, I'm not saying we're going to go and see anything crazy anytime soon, but the rate of change in February of 2023 is just unreal, and it's all pushed up by the freehold numbers. This is an element that is actually kind of a normal seasonality. It's just most people forgot what normal seasonality looks like, right? Competition in like a non-crazy real estate world. So basically anything before, 2020, that year, before, the pandemic, does start in February, meaning competition starts in February, which means that February prices do increase and level off in spring as more inventory comes online. Remember what I say about most buyers: new home, new year, new me. Their buyers are generally looking to start buying before the sellers are ready to start selling. So there's always a buyer and seller imbalance in the favor of the seller, generally in the first quarter every single normal real estate year. And I would say this year is kind of like a above average seasonal blimp, but it seems huge because most people don't remember what a normal seasonal bump looks like, as the market has been moving at like glacial pace for the last 9 months. So this all is crazy. Now, as an analogy to explain this, imagine the Toronto real estate market is a car on the highway. It's going 100 kilometers an hour. And in 2021 and 2022, it cranked up and eventually got to 150 at the highest point. Then it rapidly slowed to 50 kilometers per hour because of interest rates. It's now just getting back to the 100 right now. So that 50 to 100 kilometers an hour seems like a very big jump, but we're just going back to the normal pre-pandemic seasonality. Remember, Toronto's kind of like in this perpetual seller's market most of the time. And again, whether this like price increase is a trend or not will honestly just be determined by how much inventory we get this month. This is a really critical month, and I've been saying this for months. Now, one of the things about this kind of upside of the market is that sellers are going to sell when prices are up. So this could mean that we get more listings, but not of the like distressed kind, but for the people who want to move that are selling first, because that's the right move to do right now. Again, we shall see. Next, let's look at the months of inventory. I've mapped out the months of inventory for the last 3 years over here, and you can see as crazy as those years have been, and let's be real, they were really crazy. The current months of inventory we have right now, which is in the gray line, is in line with the other crazy Februarys that we've had since 2020. This should mean prices are accelerating right now. If you look at where we were, it's crazy how fast the months of inventory has dropped to where it is right now. And this is because sales have picked up very rapidly, but nobody is selling. That is why we are accelerating above the seasonal norm. Yeah. Now, if you found this video helpful, help me spread the knowledge out there so that other people who are looking at the Toronto real estate market actually understand what the heck is happening right now, and they're not just getting their knowledge of the Toronto real estate market by reading headlines by certain people who are rather clickbaity. Now, this way, if you are looking for making a move in the real estate market and you want an information advantage so that you understand what's going on and how to make the right move for you so you don't make a mistake like a lot of people in the last year, and you want to work with me, you can book a call using the link that's right here. It's www.chatwithzen.com. And you know what? While you're at it, make sure you like and subscribe to the Prime Properties channel and this video. Thank you. Much appreciated. Now, let's look at the running average price in the Greater Toronto Area for the last 3 years. And put it up over here, and you can see that we're basically above the 2021 prices right now, but we're still below the 2022 prices. And I personally thought we were gonna see like a 20% year-over-year decrease in this month. I was totally getting ready to make a video about how a market crashed, et cetera, but the 5% month-over-month increase really surprised me to the big upside, which is actually wow. Now here's the same chart for the 4 and 6 detaches, and you can see this month that the Toronto detaches finally broke the 2021 prices as it's been below it for a while. Here's the sad news. I think the opportunity to buy low for 4 and 6 detaches could be gone right now. Toronto semis right here, despite the demand being super hot right now, it's still below the 2021 prices on average. This tells me there's some value to be had, relatively speaking, in terms of the prices for the 4 and 6 semis. Now, if you look at the 4 and 6 towns, most of them is fairly interesting in this sample, but as always, the sample size for this micro market is very small, but it is currently below the 2020 prices. So again, if inventory stays this way for freeholds, it stays this suppressed, I wouldn't be surprised if there was continued price growth in these segments I just talked about. Now let's move on to the 4 and 6 condos over here, which have been fairly stable in all of this chaos, I would say. The big price drop took place during the pandemic when everyone's trying to flee the condo space, and it took some time for it to recover in 2021, but staying incredibly resilient right now. If there is no deleveraging by investors, I suspect things could stay this way. Keyword, if. A quick note on the pre-con side, because there is stress there right now, and I would say it's not going to affect the resale market just for a little bit. Now, the reason I say that is, if anything should happen, we should see an increase in rental supply for those that can actually close the pre-construction. This is because if you close a pre-construction and you choose to sell it, meaning you fail to sell on assignment, you lose the HST rebate of $24,000, and that's a significant amount of money. So most underwater pre-construction investors won't close, or if they can close, they'll rent it out for 1 year and then they will sell it to make sure they get that $24,000 HST back. That's why it's going to be a little bit of a delay for the pre-con market to affect the resale market. Now let's move on to the 905, basically the burbs. And you can see over here, the detaches, while peaking really high last year, strangely shot back above 2021 prices this month. Really didn't expect that to happen in 1 month. Yeah, just 1 month. Still super well above the 1 million price point for what they were before the pandemic. Semis, you can see that in the burbs, are still below the 2020 high point, just like the 4 and 6. There's probably some room to grow there. Now the 905 here is kind of, I would say, exactly where it should be relative to where the price recovery is for other markets. Now for the 905 condos, it's very similar to the 4 and 6 condos, fairly consistent. The pre-con space in the 905 will be very interesting because many people who bought a pre-con in 905 have a really big gap between the pre-con premium and the resale right now that's in the 905. We'll have to see what happens. It's going to be interesting. Now let's wrap this video up with some historic data to show you the current precedents that we have right now. First off, active listings. This is the amount of listings remaining at the end of the month that's for sale. It is the lowest we've ever had. The lowest February ever, meaning the absorption rate for these new listings is super high, and there are no new listings at the same time. There is almost nothing left to buy based on these numbers. Even worse than the crazy market of 2022 when everything was being bought. That's how little stuff there is right now. And this is because nobody is selling. That could change, remember, but even if we were to double that, it would not be at the 10-year average right now. If this continues, it proves that the sellers have more holding power despite the interest rates being higher than the housing needs of buyers. Just think about that. Now, this chart here is the active listings in the last 3 years, and you can see basically the trend that we see in the first quarter of each year. Active listings should increase quite fast. In most cases, sellers do sell as you move towards the second quarter. However, if you look at 2023 here, we're going the wrong direction. See what I mean? Prices could accelerate. There's nothing to buy. Buyers are still out there. Now, here's the new listings for February. We're at a 23-year low. Yeah, this is the lowest we've gone back in history. Again, sellers aren't selling. Again, this could obviously change if prices go up, but the current imbalance is where it stands right now. No one is selling. Similar to before, if you look at the rate of the new listings in the last 3 years, in the first quarter, you can see that the rate of new listings when you go from January to February should be much higher. So it's about 1.35x for new listings in 2020, 1.6 in 2021, 1.77 or so in 2022, and this year we got 1.09, meaning the same amount of new listings as January. Sellers aren't selling. And when you look at the sales now over here, we're at a 14-year low. You would think this is a problem and the market is slow, but that's the wrong perspective. I bet you sales would be much, much higher if there was more stuff to buy. This is why competition for buyers is incredibly fierce right now. Again, not 2022 peak fierce, but still fierce. Sales are at a 14-year low, but new listings are at a 23-year low. Active listings have never been this low before. Never. This is exactly why the months of inventory is below 2 again. Now, do you see the big picture? You see it? Year over year numbers look absolutely horrible, but the acceleration month over month is surprisingly high. After all this, the question is the bottom behind us? If it's true, it is behind us, the bottom would have been somewhere in January or December. Again, 1 month doesn't make a trend, but a trend does start with 1 month. This is why I've been saying we have to monitor the new listings in March. And the first week of March, so far, we saw a 10% increase from the previous week. So it is promising, but it is nowhere near enough. The real test of the market will be after the March break and how many new listings we get. We will find out. Hopefully this gives you a truly, truly deep understanding of what's happening in the real estate market as I kind of broke this all down. It's more than meets the eyes than ever. And if you do want to work with me on your next move so you actually have an information advantage over everybody else and understand kind of where the market is heading, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.